Hello everyone, this is Zach and welcome back to the channel. It is the 16th of June 2025 and it is also rollover week in the index contracts. So I thought since Zero Chart does this weird thing of deleting all of my levels when I roll over my contracts, I thought since I have to draw them again, why not let you guys tag along? I'll speak out loud the things I'm looking at, what I'm seeing. This won't really be a teaching thing. I'm just going to be talking out loud and you can pick up um, little tidbits of the way I'm thinking and my ideas and maybe implement that into your own process. If you want more teaching specific videos, I can also make those, but this will be more so just me speaking out loud. Okay, so I usually like to start with a higher time frame. I have two types of higher time frame I use, the ETH and the RTH. The um, ETH being the 6 p.m. to 5 p.m. the next day, and the RTH being 9:30 to 9:30 a.m. to 4 p.m. The reason I differentiate between these is if you look at like for example, a higher time frame chart right here, you can clearly see that this is RTH, the white, right? And the ETH is this gray. You can clearly see that the RTH receives all of the volume, and the ETH receives almost none of it. RTH, ETH, 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 RTH, right? So there's a reason I differentiate here because I want to clean up my charts, only look at data that I truly find important. So what I will do is only use the RTH time period. That's where the large institutions are trading for the most part, and use that as my reference points. So I like to go to my RTH daily chart, and what I do is I defined a range here. This range is from like November last year, November 2024 to February/March 2025. So a couple months worth of range. We'd been ranging, we lost the range, we came back, tested the range, rejected it, sold down. They found a low, they came back inside the range here, tested it again right there, and now they're rotating, trying to get it to the other side of the range. Okay, so if that's the auction process, what I can do is draw a volume profile in this range, which I already have, and define some peaks, valleys, ledges, whatnot around this range, around this profile. So one that I really liked was 6100. It's kind of a whole number. That's why I like it. It's also a ledge, so I like that. All-time high, balance, point of control. So this balance, the point of control of it was 6025. I also like that. I'll just leave that there so it's not crowding up our screen. And the all-time high at 66.5. I also have that marked. So yeah, we can see like the auction process is quite clear at the moment. We're back inside the range. Simple. We back tested it, and as long as this area, this level is held, all these bulls are fine. And we're still in the auction process of rotating this range, of going to the other side. So we're back, we're trying to go to the other side, and until this is lost, this process of rotation to the other side is still valid. Okay, so we're clearly in rotation. That should be our target for a higher time frame swing trade perspective. I'll show you how that really ties into what I'm doing on a day trading level. So because like I have a higher time frame swing trade target, now I kind of mentally build a picture of what the upcoming candles will look like on our way to this bigger target. The way I do that is I use volume profiles again, but this time on a smaller time frame. What I'll do is I'll go to a intraday chart. So now this is showing me 9:30 a.m. RTH, 9:30 a.m. to 4 p.m. Eastern time only of every single day. It's removed the gray areas as in these areas. It's removed those. So now we're seeing a much cleaner chart. And what I'll do is I'll look for places where the the days were overlapping. Like this is a day and it overlapped a lot with this day and with this day and quite a bit with this day and quite a bit with this day. So because there's so much overlap, I'll turn all of these into one zone. Because there's some overlap here and a little bit of that overlap, I've been profiling for so long that I can almost see what the profile looks like without even drawing it. Like it probably looks like something like that, and then like that, like that, and then like that right now. Right. Whoops. Undo that. I'm trying to yeah, there you go. So there it is. There's the bigger one, and yeah, there's the small one. Right. Wonderful. Okay, so we've drawn a volume profile across these days. I'm just kind of freeballing it here. Um, Just trying to have a look at what's going on. Why don't I take a profile and draw that? Okay, so what I'm seeing is that since price is trading right here at the moment, that gray box right there is my current price line. You can't see price being traded at the moment because it's 9:30 p.m. at night and we're in this gray ETH time, so you can't really see that. But if you were able to see it, it would be down here somewhere right now. What I want to do is define some peaks and valleys of this profile and use those as mini ranges. So if price comes back inside this zone, for example, this HVN it's called, if it comes back inside, I expect it to rotate and I expect it to use the edges of that as an area to reverse, or aka revert back to the mean, back to the value, back to the average price being the middle. So what I'll do is I'll define these as zones and I'll define the areas in which the inflection of these zones will happen. So 60-50, I kind of like that. If you're confused about why I'm drawing my volume profile where, it doesn't really matter. Like I'm just trying to encapsulate all of this information, and how far I extend it doesn't matter as much as long as there isn't too much overlapping information. Okay, so okay, we have a zone right there. I'll mark it like that. Yeah, so see, like this one is a little confusing. I'll kind of explain what my thought process is going on here. I s- if you profile for long enough, you will be able to see the participants building this HVN. So at one point, this HVN, which looks pretty well made, unlike this one, right? This one is just like very narrow, very tight, whereas this one's like wide. This one's also wide. It's kind of drops off here, but you know, at one point, this one was also kind of narrow, like this one, right? And it got built, it got filled in. So this one, it will eventually probably get filled in here, right? That will get filled in. And what I'm trying to do is decide if I want to mark the area in which it's already filled in or the area in which I want it, where I think it will be filled in. It's kind of like predictive profiling. Um, Shout out to my friend Rizzo who came up with that term. Um, but yeah, both of them are valid, so I'll kind of mark both of them. Um, yeah, 63. Okay, so I like those. What I'll do is I will keep this one. I'll keep this one. And what I'll do is I'll turn that, since these two are very tight, I'll turn them into a zone. Similar to that. So what instead of marking off, the whole thing like I did here, basically what I'm doing is I'm just marking off the edges. So I know as long as we're inside one of the edges, we're rotating. So we know that that is a rotational zone. This is a rotational zone. Um, this is a rotational zone with the potential of going to that and being the rotational zone because I think that is where we're going to fill in. Let's see. And yeah, we can also have a rotational zone down here. So I'll mark that. Copy and move, and just eyeballing these. But yeah, you can see my general process of how I'm defining these levels. This is just me defining the areas of inflection of the auction. Now we have all these levels done. That's very nice. Um, and you can see like there's quite a bit of respect to these levels already going on. So they defended there, and really my entire process, my philosophy in trading is that I def I I mark these levels and then I let the market go to them, and as they're trading at these levels, what I will do is watch the footprint. This was at why don't we look at this one because it was at the open. 1559. That's a little bit too close to the close. You know, I don't want to cherry pick too much. These I'll just use this one, 1559, even though it's only 1 minute away from the the close. So the data might be a little bit skewed. But yeah, you can see there's some clear absorption going on right here. Right here, yeah. So I know this is a place where we can get a potential bounce. The price comes down to it, and they put in a bunch of selling. You can see minus 396, minus 359, minus 162, minus 111. Tons of volume being transacted too. 1,500 contracts, 1,600 contracts traded. So this is delta by volume, this footprint. You can see there's tons, 682 contracts traded to the sell side. Aggressive sellers. And what's happening? Price isn't moving down. Like this is so much selling that price should be tanking, but instead it's staying relatively flat at a level that is potentially support. What does that mean? Absorption. Now, I'm not really going to get too deep into what absorption is. You can watch other YouTube videos on that. I can make a YouTube video on that if you guys would like, just comment below. But it's absorption. Passive buyers are meeting aggressive sellers, and you can see the buyers step in. Great place to long. Put your stop right under. Very tight risk, 3 points maybe. And what? By the time it closes, you're at 93. You bought at 83. That's 10 points. That's 500 US dollars with one contract. With 3 to 5, it's thousands of dollars, right? Now, I did cherry pick that example, but you kind of get the point. What I'm doing is I'm drawing these levels and then I'm just watching the order flow when these levels are being hit, right? You can see the sellers are getting absorbed right there. The volume is a little bit lighter here because it is, like I said, the ETH now. I don't trade the ETH, but you can. The principle still stands. Yeah, and another thing I like to mark is the value area high and low of a prior day. So that is the 70% calculation of a single day's value. So where there's a big drop off not a big, where 70% of volume is traded, so where the color changes, that's really what it is for mine. Where the blue meets the gray, that's the 70%. That's the value area low, value area high, and the point of control. I like to mark these, and if we trade inside of them, I can use those similar to the green boxes as levels for rotational trade inside of the prior session. But really, my entire idea of intraday trading is I just define these zones, I wait for them to get hit, and I watch the absorption. If I miss the trade, let's say, if I miss the entry and I want to get a continuation play, like I can just sometimes I'll toss an anchored VWAP onto the RTH session, and I'm like, oh look, we're breaking out of this green box, and now we're doing a retest of it. Well, that retest also correlates with this anchored VWAP. I actually took this long right here today. Oh, it correlates with the anchored VWAP. And it's my zone, and I'm seeing the absorption. Okay, let's try it long. Maybe we'll get stopped out and lose 1R, 2 to 3 points. Or maybe we'll make 10 points, right? So if you're patient, your risk to reward should pay itself, pay you quite a bit. There's a couple opportunities with anchored VWAPs. It does get messy over here, so you need to be still present with the order flow. Anchored VWAP is not a holy grail. This is all you need. You can see if you tried trading it there, you would get chopped around really badly. Um, but yeah, that's kind of how I'm looking at the markets lately. Lately being the last few years. Um, yeah, I don't know where else to go with this. So peace out. Thank you.